accolades, your point of view matters to a lot of people. You heard Jim suggest that the economy is doing much better than people think it is. You're one of the doubters, in some respects, about where the economy is going. So let's match this up.
Yeah, absolutely. I am one of the doubters. I've been a doubter even the last time I was here in the set when the market was higher. So for us, macro is really like the big headwind that markets are facing. Higher for longer, cost of capital being elevated is something that we've been talking about since February. Liquidity is getting sucked out of the system as well, which I think is generally a pretty big and important headwind. Obviously, there's geopolitics that we can talk about, but that's also an additional tail risk that's very hard to sort of handicap. Fundamentals, to your point, I agree. I think I see them slowing. They're just not collapsing. And the word that I would use on the fundamental side is we're seeing increasing bifurcation on the fundamental side.
It sounds like the crux of your argument is built around the idea that the lag effects are going to be more dramatically felt than people realize today. Fair?
Yes, very fair. I think there's just a lagged effect, and this time around in this cycle, the lag simply may be longer than what we're accustomed to sort of seeing in the prior cycles because of the unprecedented injection that we've got during COVID, and because of a relatively healthy starting point for things like balance sheets.
Jimmy, I want you to respond, and then I want Steph to also, because you guys have a more sanguine view on where we are relative to Dubravko and some of his colleagues over at JPM.
Okay, Dubravko, always good to see you. Thank you. Look, for the last year and a half, I think you'll agree, the economy's done a lot better than expected. And let's just chalk that up to the lagged effects being a lot more lagged than any of us expected. All right, let's just say I give you that, and we can disagree about the path going forward. But these companies that during this extremely long lag time have out-earned, and cleaned up their balance sheet, doesn't that actually perversely extend the lag further from the point of view of they have less debt to refinance, right? I mean, that's what we're worried about, at least at the corporate side, is they're going to have to refinance at these much higher rates, except now there's a lot less debt because they've paid down a lot with all the extra cash flow. Is that right?
Yeah, I think that's broadly right, but I think that's just one part of the picture. I think for the S&P 500, for the large cap complex, balance sheets are in a pretty good spot. Rates going higher is a headwind, but just a gradual headwind. The problem is, I think, as you move down the cap spectrum, you look at mid caps, small caps, the entire private sector, there's a more significant portion of that's variable, that's more sensitive, if you will. Balance sheet is more sensitive to cost of capital. And everything that's happened so far during this, call it increasing headwind from cost of capital, has happened under a relatively healthy top-line demand type scenario, where pricing power has been strong and where a lot of corporates have been basically growing not organically, but just through price.
Dubravko, forgive me, why aren't companies laying off people?
I think that's the lagged effect. I think that's a risk that we're facing in 2024. I'll give you one statistic. S&P 500, if I'm not mistaken, which is right, the fortress balance sheet employs only, I believe, 12, 13 million people. If you look at mid-cap, small-cap, private sector, you're looking closer to 60, 70 million. And that's the area that's more vulnerable to the macro headwinds.
Small caps are in a bear market already, though. Like, what if a lot of what you're saying is true and priced in? The Russell is not the S&P.
I think things are definitely getting priced in, but to me that's a worrying sign. To me that's a sign that the market is telling you things are slowing down. We're hanging on to the Magnificent 7, Magnificent 11. All the returns this year are coming.
Yeah, I don't know. These guys are a little bit way too optimistic. I like this guy point of view a little bit more, being a little bit cautious. I mean, the data does come in and tell you something is going on. Like I expected, employment costs went up, okay? Employment wages went up, and this is what I was trying to tell you guys. Inflation is sticky, especially when it comes to employment and rents and that sort of things. And this is very negative for the market. But you can see, I mean, it was up pre-market. I don't even know how, but last night the futures was down. I was looking at this guy, and the futures were down. And then somewhere along the line, it started going up. Don't know why. but it went up, and the data was released at, you know, right here, 8:30. Boom, went down. So this is a negative, and if you didn't go short at the open, you're gonna miss a lot, because the disposition or the bias is obviously negative when the data comes in. And this is a lot worse than I thought it would be. I mean, 1.1, right? So it's gone up. And the other one, the employment wages, 1.2, where the previous is 1. So the previous is previous quarter, and that employment wages went up. Expectation, well, the previous was 1, and now it's 1. These are pretty bad macro data. Okay, housing index obviously is going to go up. Well, not obvious, but I was expecting it to go up at 9 o'clock, and it did went up a tad, negative for the market. I forget when 9 o'clock is. Let me see, right here. It didn't really react, but the point being, um, you know, you should have behaved negative for the initial part of it, like right here, right? You should have been negative until you reach this point, right? And I was saying, well, is it gonna end low of day for the month, or low of month? And obviously that didn't happen, but you can see it not happening because it was, first of all, the futures was higher, which was unexpected. Then it opened up higher than I thought it would have, which is a positive bias. So the day had a positive bias component to it. Now, I I went short, but I didn't go long, obviously. And the reason I didn't go long is because I was still holding on to my straddle for my runner, and I like to hold these runners. And I was looking at this last night, and I was saying, look, the market, it goes down, but then there's period where they are flat. And when it's flat, right, that is when you make money on your straddle or your reverse straddle, because these time components of going sideways. Now, sideways is the market does two things. Well, three things, but mainly it goes up or it goes down. And at certain point, it goes sideways, right? Why doesn't it go sideways more often? It's just because the options, right? The zero DTE is mainly the options that force it either one way or the other. And sometimes it's like 50-50. It's sideways because there's a key level. In this point, that this is where a key level, and then you got that Friday, breaking this key trend line and then reversing. And then at this point, it went sideways, down, and then sideways toward this trend line, and then down it goes all the way to the 4200, reverse a little bit, then went sideways here. And now I was expecting this to go sideways, right? After this bounce on this 4100. Well, guess what? It did not go sideways. I mean, I did cover out of it, out of my straddle when it broke here. Right? I was hoping it would stay within the this range, or this going sideways, and I missed. I was going to cover my call options that I sold if it hits the 5 minute. Again, it didn't hit the 5 minute, and the reason why it didn't hit the 5 minute is because on this chart you can see it hit the 5 minute on the QQQ. So that's why it prevented it to hit the 5 minute on the SPY. The thing that frustrates me is, I'm trying to fight for these little bit of profits because I like to execute on technical. At this point, you're like, come on, it's got to hit the 5 minutes, right? But it didn't. and that's very bullish because when it doesn't hit the 5 minutes, that is very bullish scenario. Um, what is trying to tell you is the buyers are buying ahead of these technical lines. Now you can say, well, the QQQ, this is where the buyers reacted to. You can argue that, but the SPY has more technical significance than the QQQ or the composite, right? And I was saying how yesterday I missed on this 15, right? I missed on this 15, and I forget what I was trying to do exactly. I was trying to short on this 15, and I missed it. But regardless, right? Sometimes it just doesn't hit key technical lines. It went above. I cover my straddle because I knew at this point there's a morning session and an afternoon session. And the afternoon session is very often one directional. I cover my straddle and pretty much play, um, you know, scalp on the short end, right? So, which, I should have went long. I should have went bullish. I didn't. And the reason why I didn't, obviously, is because I am holding on to the belief of these guys ultimately reversing. And anytime, you see something like this where it triggers, now, looking at this, right, it did hit, um, right, the SPX, it hit this 50-day moving average. And so by hitting this 50-day, 60-minute, right, 60-minute, on the 50-day moving average, right, it was a point where you could have gone short, but then it retested it. So the first time it tested it was at 41.90. I think it was like right here, right? And you could have short this, but then it broke out and it hit this, and then you could have short this. I did play some of this. I didn't make as much as I could have, but the bottom line is I was still successful for the day, and 30 out of the 31 days for yeah 30 out of the 31 days for October I was positive. So overall, I'm still doing pretty well in the sense that even though I miss on these, technical lines here and here, I'm still doing pretty well. And there's just so much data that you can get confused, and it's so easy to get confused. Because I was looking at this and I was like, man, and this is not coming in obviously now because for some reason it's broken, but you can see that the volume was coming in pretty heavy on the call options, and they were coming in on the puts as well, but it wasn't coming in. It was like the weaker point, and I was like, oh, come on, you know. My instinct was telling me it was positive for the day, and also the VIX was dying. I don't think this will pull up because right now it's broken. Yeah, but the VIX was pretty much, the VIX wasn't pulling higher for the day. So, um, let's go back to it now that it's back up, right? The VIX was going really low, okay? And so, I mean, the morning session. So it was telling me there was a positive sentiment to it. And I really couldn't figure out why. Now, obviously, the VXX kept going down and down. So the day ended high of day pretty much, I think. Yeah, it did end at high of day. And that's what I'm saying. Very often it just likes to end high of day or low of day for whatever reason. And it landed right at this significant level. Now tomorrow I'm expecting it to be flat. Just because it's at this level right here, I'm expecting it to be flat because I was expecting it to be flat right here. But now, because tomorrow is the Fed, I'm expecting it to flat. But it doesn't have to be because there are data that's coming in tomorrow that could change that, right? In fact, this is probably not going to be flat. So I'm going to scratch that idea because this ADP employment is a very critical component. And it says, like, why isn't companies laying off? Yeah, and people, they're way too optimistic about the reason why there isn't more layoffs. And the ADP employment change, um, it's going down, but every time you look at this, you see the forecast is higher than the actual. Like the forecast was 153 and the actual is 89. Forecast is 195, actual is 180. Right here it beat the actual beat the forecast quite a bit. So and here the actual beat the forecast quite a bit. So something about this employment report being quite a bit off. So this beat like by 200K, 200K, this missed by a little bit, and then this missed by a lot. So is this going to miss by a lot? Very well could be. Now, if it missed by a lot, if it comes in like in the 80, that's going to be positive. So maybe this is the reason why the market it has gone up for the short term, right? The interim. Why is it going up? Why did it end at the high of the day at this technical level right here? You can say, well, it's at that technical level um, because that's where the trader wants it, right? The technician, they say, well, look at the MACD, right? The MACD is positive, and now it's starting to go higher. So it's going to end at this technical level, and then it's going to go up and continue to go up. You're right. I mean, as far as like that argument, it could be right, but really the reason why it ended at the high of the day and at this technical level is, I would think, because they're expecting this ADP employment to come in lower than the forecast, right? The forecast is 150K. If it comes in at 80, that's gonna spark, I guess, a gap up. Where is it gonna keep running in before it hits, the FOMC statement? And you got this job openings report that may or may not be significant. Then you got the ISM, and I'm thinking this is going to be negative as well. So that is also a positive sentiment temporarily, because if it's slowing down and job is slowing down, that's going to force the FOMC, the Feds, to essentially reverse or be less aggressive, right? So but this already is written in stone. Not written in stone, but they already made their decision ahead of this data, unless this data is going to be asked in the press conference, which probably it would, especially if it's favorable to the stock market. So the stock market being quite a bit down right now, any positive sentiments, meaning any positive data to the stock market, is gonna get asked during that press conference. And Jerome Powell, it's kind of like a self-fulfilling prophecy, right? They'll press Jerome Powell and say, "Hey, look, the employment report is coming out weak. The ISM data is coming out weak. What does that mean? And will you be less aggressive? Or would you?" And of course, he's gonna answer yes, right? Because that's an obvious answer. When you press such self-fulfilling questions, they're going to reply forward-looking wise to answer that is favorable to the stock market. So I am still expecting, this is the long trend. I am still expecting this right here, right? The initial statement from the Fed is going to trigger a downward, and maybe the initial conversation from the questions is going to go down. But at a certain point, there is a squeeze potential, a very good squeeze potential, and that's because of the press conference and the questions that will be asked, especially if they ask the right questions, and especially if this data comes in weaker than expected, right? The ADP, the ISM employment, or the ISM number, which typically below 50, right, is a negative negative sentiment toward the economy, which of course the worse the economy is, the less aggressive the Feds are going to be in their fight for inflation due to the dual mandate. Now, I was looking at this, and I was looking at this incorrectly the last time, and now I realize that, you know, this is the current, the blue bar is the current Fed fund rates. And so in June is when they estimate a probability of 38% of a rate cut. And you say, well, 38% is the highest probability amongst all, well, actually, it's actually 50% because there's a two, if you combine these two, it's a 50% chance of a rate cut. So in June, there's a 50-50 of a rate cut or most likely no cut, right? So this is when I would assume it starts going positive for the stock market. Obviously, this data is forward-looking data, so maybe in March is when, Q1 of the next year, maybe is when the end of Q1 is maybe when you get that capitulation, and then starting uh April, May, June is when it starts going back up. And so I am still hoping for next year to be down and then up. Now this idea that it's gonna crash, it may not happen. The stock market, this may be the low. We don't know, right? Because based on what this is saying right now, yeah, if they're not, if inflation is pretty tame. Now, inflation is a bogus measurement because it's year over year, and like I say, it's just a bogus measurement because you get the spike condition last year, and now a haircut is like $25-$30, and then you get slightly, 2% inflation. Well, it's still, like 30, 32, 33. It's still going up, right? It should not cost you $30 to get a haircut, is what I'm saying, but it does cost you $30 to get a haircut. And now, going out and eating and going to the movies and everything, it's just going to be very expensive, very expensive. And because it's very expensive, is that eventually going to be a bubble that will break? Because how much personal spendings or how much debt can personal individual have before it eventually crashes? Well, we don't know. At this point, you just have to say, just take it day by day, week by week. And at this point, you're going to have to trust that this data is suggesting that there's a 50-50% rate cut of either 25 basis or 50 basis for June, which is positive for the market. So, yeah, I mean, there's just so much information that, you know, and if you look at all these guys' information, all these stock channels, they really don't tell you anything like in depth. Like most of them just draw lines and say this, that, or the other. It's really frustrating when I'm looking at these information because I'm looking for something of, something I'm missing, something that I can't figure out on my own that I say, oh man, I did not see this. And it's so hard to find it because most of these information are just, well, I hate to say it, but just trivial or just non-applicable. So, I mean, I rely on my video for my analysis and my, you know, my execution more than these other videos, which is unfortunate because I'm looking for something to actually get good information. Um, Yeah, so it did not end at the low of the month, right? And I was thinking, well, yesterday I was looking at this and I was like, this value Vanguard should have hit the 50 month moving average to end the month, right? It's still low. It's still low on the MACD, granted. So it may still hit it in November. Um, it still may hit it in November. So just because it didn't hit it in October doesn't mean it won't hit it in November. But they did rescue, so to speak, right now. Like I said, there's a reaction off of the 20-month moving average. And I failed to realize that if the candle is not a huge red, which is what this is, and what this is, right here, these are huge red candles compared to this guy right here, which is not a huge red. I mean, it's a significant red, but it's less than this red. If it's not a huge red, they're gonna doji it, meaning they're gonna reverse it just because they say there's not enough shorts, and I'm not gonna let you end the month at this significant level to boom. I mean, it could have happened, but I mean, yeah, I guess the data that came in, unfortunately, the data that came in wasn't weak enough for whatever reason, even though it's pretty damn darn weak, right? But I think the consumer confidence was what threw me off as well. I mean, I was expecting this to be lower, and it went to 102. So I knew the day was lost as far as going to low of day. I just had to execute it correctly. I missed this. It didn't get to this one, so that was a frustrating move. And of course, I didn't go long. I didn't go long to any of that, which was yeah, which is bad, which is bad. I mean, I still made good money, but not as good as I should be making. And there's always room for improvement, but knowing my methodology, I'm just gonna always miss this because my sentiment was, like I said, it was gonna go to low of day. The data came in negative here, but yeah, it's just confounding data. And the call volume wasn't as strong, right? That's the other thing. This call volume it wasn't as strong. I mean, yeah, it did come in. It did come in. I was seeing it, but it was just not as strong as, and here it is, right? It was starting to come in, and this guy starting to come in. Here it is, right? This is where the strength started to pick up on these options, right? And on this guy was really in the morning, right? The only one that was kind of strong was here. And that kind of got me confused. I'm like, what is going on here? This doesn't make any sense. This thing should not have any volume. And this should not have any volume. But there it is. I don't really understand these, to be honest. Other than the fact that these are sell volume, maybe I don't know. I don't get it. Um, but why are you selling it right? I mean, you should have sold this out like way, way ahead here. So these are information I wish I would know what's going on and why. What is going on here? I don't know. Right, but I did see the call volumes, and I knew it was gonna end positive for the day. Didn't know if it was gonna end high of day. Um, my shorts eventually did pay off, and looking at the SPY here, right? Some of my shorts, like here and here, did pay off. Not a lot, but it did pay off. And yeah, another level here. Let me see the the QQQ, the composite is gonna end. Well, maybe the Q is already right there. Let's see, close to it. So it's probably gonna touch this tomorrow on the QQQs. Let's look at the MACD. Yeah, the MACD is not, doesn't really mean anything right now. And these guys, this is on the 5 minute. I converted it to the 5 minutes, so it's not gonna say much because I need to bring it back to the daily. And this is on the 15 as well, so this is not going to say much. Let's see what AMD is doing, because I want to know. I want to know what AMD did. It beat earnings? Let's take a look. Let's show extended hours. No, it missed earnings. Like I expected, right? I knew AMD was gonna miss. I mean, I was saying it all along. You know, let's look at not this guy. Let's look at the earners. Where is it at? Gotta go to economic, and here it is, earnings, right? So this week, right? So I knew McDonald beat, and then I knew Pfizer missed, right? I knew Caterpillar was gonna miss, and I think Amgen missed as well, if I'm not mistaken. Let me look at put in Amgen. So yeah, Amgen did miss. It was pre-market. So a lot of, I mean, that's just strange, right? They're just I mean, the companies are coming in weak. Caterpillar missed, right? Let me use. I guess I'll use this guy in the meantime, right? Caterpillar, right? So Caterpillar, Amgen, AMD, they all missed, right? Pfizer missed as well. I'm pretty sure. Bud probably missed. I just type it in here. Just take no Bud beat. Oh, that's because of the whole thing. And the other one was Pfizer. Yeah, Pfizer, I guess, didn't do anything, unless it's the extended hours. Nope. So Pfizer really didn't do anything. But overall, I mean, these are significant information that missed, and I'm pretty sure it didn't react off of anything. Eh, yeah, it reacted a little bit. Show extended hours, right? It reacted a little bit. So I knew AMD was gonna miss. So it's just kind of disappointing that it wasn't more negative. Because the data, I hate it when the data comes in what I expected it, right? But I mean, for the most part. But then there's one information here, and I guess the employment was the other one I missed, right? This one, I think they're forecasting this to be good tomorrow. And yeah, so I just didn't go long. It's hard to go long, trust me. It's just so difficult. I see it here, right? So I cover my straddle because it'd be hell if I was gonna carry a call straddle to the upside, because that's when you lose a lot of money, because those call option gets very, they raise value very quickly. So I cover my call and my puts, and I say, why don't you just cover your call and hold on to your puts? I guess I could have done that. In hindsight, I should have done that, but my puts were already so much in value. I didn't want to lose those puts. So risk reward management, my philosophy. And yeah, I missed all of that. I just made a little bit on these downturn, I guess. So yeah, just gotta, I don't know. It's one of my pet peeves that I keep. I hate this all the way, is when I miss out on these technical levels because I keep timing these technical levels, even though my disposition or my sentiment was correct. Right, I'm waiting right for it. It just didn't hit, and they don't hit because it's a bullish sentiment, right? And these they don't hit for that reason. Same with this. They don't just give it to you. I mean, they did get to it eventually, but it didn't get to it the way I wanted to. Um, so tomorrow is the Fed's, which means in the morning probably is going to be flat. I mean, it has to be flat, right? This thing has not been flat for a while. I mean, here's flat. Yeah, it hasn't been flat since this point right here. So I'm expecting flat until the FOMC, which is then I'm expecting this. So hopefully I'm correct. Actually, it probably won't be flat, to be honest. I keep forgetting this is gonna make a difference. This is gonna make a big difference as long as this guy too. These two guys are gonna make a big difference. So yeah, scratch that. It's not going to be flat. It's gonna do what it does. Most likely it's gonna be positive. I mean, you gotta lean positive because the reason why it ran up today is because of this number. And well, actually, you gotta see what the number comes in. If the number comes in positive for the stock market, it's gonna be positive. And then, of course, that Fed thing is gonna hit, right? This is still my expectation. The statements, initial conference, then they're gonna ask the right question. It's gonna be a squeeze. So hopefully I'm correct.